Hello and welcome to the Investor Master Series. My name is James Boyd. Alongside with me is Barbara Armstrong in the chat. We welcome her and all of you. We got Josh the comedian with us here today saying that JB, you're our only hope. Oh, I doubt that. Josh, that was funny. You had me laughing. Of course it did. Now, also, Bill, welcome to you. Fayez, BJ, Gary, Harlot 3000, and many others. Welcome to all. Now, remember, when we talk about Investor Master Series, we're talking about being proficient in stock investing, okay? Maybe using technical analysis, using fundamental analysis, using options, maybe basic, maybe also advanced as well. Want to also kind of get a sense of how do you take all those disciplines and bring it together. So this is not a beginner class. It's kind of really meant to be intermediate to advanced, but really the whole purpose is how do you bring it all together, okay? And that's kind of what I like to do. So just real quick as we get started, remember Barb and myself, with what we discuss here today is done for educational and informational purposes only. We'll talk about stocks, but also from time to time, we'll bring up options as well. Remember that options carry a high level risk and is not suitable for all investors. Also remember that that Schwab does not recommend the use of technical analysis as a sole means of research. Join us on Wednesdays at 4 p.m. Eastern as we bring up fundamentals as well as technicals in that class at Wednesday at 4 p.m. Eastern. Now, also remember that when we talk about examples, we will use the Paper Money software application known as the desktop. Get used to that. Nice platform to use. It's real trading and paper trading. You can choose and have both up as well. Remember that investing involves risk, including loss of principal. When we talk about examples of maybe short options, those can be assigned at any time prior to the expiration. Regardless of the in-the-money amount, we are talking about American style options, not European, okay? And also when our agenda here today as we talk, definitely want to kind of take a look at how's the market faring after yesterday's, let's call it a shakedown in some of the NASDAQ stocks, okay? Want to kind of talk about maybe what is kind of being purchased after that, okay? So what are some of those pockets where sometimes investors use maybe market sell-offs in the shorter term to buy? And my focus here today is to talk about earnings trades, okay? So that's really what I want to focus on with many stocks coming up and having earnings. Now, what I want to do is also just real quick is give you kind of some information just to make sure you're aware. So first off, we're on YouTube. You can go right to this page and you want to make sure that you bookmark this, okay? So what you're now going to recognize is when you bring this up right in the middle of the page, you can subscribe. It's free, okay? If I had $1 for every time someone said, geez, I would like to learn how to invest, and they didn't know that this was on YouTube, it hurts my heart when they say that, okay? And I always tell them, bring out your phone. Let's get you subscribed today, okay? It's free. Make sure you actually have that. Now, also, quick reminder that we also have a playlist for each of our classes. So when you attend Barb's class or my class or whatever, there's a link to that playlist. The link that I just sent you is for this playlist, and that way, just like on your favorite TV shows, you can see the past episodes. And by the way, you can bookmark this as well. And we could see past classes that were taught, okay, and catch up on those, okay? Now, also, last but not least, want to make sure that you have the calendar. And what you're now going to see is there's the calendar, and here's a calendar down below. We'll refer to that in just a moment. So those are some quick links you always want to have at your fingertips and also be able to share, because many people are going to probably ask, hey, what are you listening to? Now, what I want to do is let's go just real quick to the market briefly. Now, when we look at, let's say, the market, we're not just going to look at the color. Oh, it's green. It's good. It's, we want to look at the color of the candle. Sure. Is it up or down? But look at it in relationship to support. Okay. Now, if we look at let's say the SPX, and I'm going to start with the SPX first. If we look at the SPX, and this is what we said yesterday, it kind of just fell down in the midpoint of the channel. Trend change? No. Short-term breakdown? Yeah. Sometimes we see when we get breakouts, sometimes that first time it doesn't hold, but as long as we kind of hold the midpoint of this channel, let's just call it 59.80 or so, it could still be bullish. This is not unusual to see this, okay? What we don't want to have happen is to fall all the way back down to 58.62 and restart over again. So we want, so far, it is catching the midpoint of the channel, and we see that Lisa Jack lower shadow. Lisa, that's for you, okay? and seeing that little tail there. Now, some people might say, well, could we be hammering and making a new support area? That's the idea. So from yesterday's discussion, we can't say the market's bearish, okay? But if I kind of, for example, said, well, what about the NASDAQ? Was it kind of a little uglier? Well, of course it was, okay? That's where we kind of had some flooding, if you will, in that area where prices were pushed down, and it didn't hold the midpoint of the channel. It swept all the way back down and is trying to reset itself. So NASDAQ a little bit under pressure. Now, when we also go back to just real quick, the Dow Jones didn't do that. The Dow opened up lower, because remember, the Dow's correlated to the other indexes as well. It was bought, and it rammed, keyword, rammed, all the way up at the top, closed, all the way at the top, and then today gapped to the upside, and then ran again. So what do you see? Well, all selling it just because they're selling one area doesn't mean they're selling everything. It looked like they actually bought the larger cap stocks. Now, we want to kind of also take a look at kind of what's in here and what's kind of leading that space. But if you take a look at this, a little push, and that push is going right back to this prior high. Ladies and gentlemen, boys and girls, the one thing we have to recognize is this is a monster cut pattern. Now, if we had $1 for every time that someone said, well, the market's so high, you know, the one thing that we don't factor in when we say market is so high, we never actually really throw in, well, the earnings of the companies are higher. You don't ever throw that in there, okay? So you want to kind of say, yeah, the price is high, but is the earnings of these companies higher over time? And what are their estimates going forward? So when we look at, let's say, the Dow Jones, very strong. That's the leader of the pack. When this whole move started, it was started by the Dow Jones. That was the one that actually led. Now, when you look at the Dow Jones, when we look at the trend, which trend do we actually have on the Dow Jones? Well, you got the Russell in trend 4, SPX kind of sitting here at the midsection, okay? NASDAQ in trend 1, and what you're now going to see is the Dow should be in 3 to 4, okay? There it is, 3. It's in trend 3, but probably getting to 4. And when we look at the relative strength, it's not even really much of a comparison, okay? So if you look at this right here, the only index that's really been in that green for a while, it's the Dow Jones. Now, the investor could buy a product that tries to track the Dow Jones. That's a strategy too, okay? There's also a class tomorrow on index options, and that could be a strategy as well. But the only other one that you're going to see in the last 2 weeks that's been okay is the SPX. We don't talk about the Russell 2000 as much. Keep an eye on the Russell 1000. The Russell 1000 looks a lot more like the Dow does. Okay, so keep an eye on that. Now, the one thing that you will notice is brand new hold or hold on the Dow and the S&P. We do see a 20-day high on the Dow, and you're going to really see, we're starting to see that little crossover as well. Trying to get some continuation on the Dow. Bull flags trying to really set up on the SPX and the NASDAQ, but they are early, okay? Just briefly on the sector front, when we go back down to the sectors, the biggest thing that probably the shock that we had yesterday was Staples. Staples missiled to the upside yesterday on that tech weakness. And if you look at, let's say, the sectors, what you're now going to notice is, and I'm just going to go to trend first off. So if I said, hey, which ones really have trend 3, something pretty quite strong? Well, it was Staples, okay? You're going to see healthcare is also in there, which was weak before, okay? Not now. And you're going to see that financials is there, real estate is there, and so is communication. Now, that's kind of been the area that we tried to focus on over the last week. Meta stock, Google, you name it, Netflix in there, etc. And what you're now going to notice is if we look at the 1 week percentage, it's really been led by healthcare. Now, when you look at, let's say, the areas, the pockets of strength, there's a lot of pockets of strength on the relative strength. And remember, the relative strength it's the performance of the sector compared to the S&P 500. And so what you're going to notice is it's communication that's leading. Okay, could that continue? Financials, and you're going to see that if you look at the SPX, that's going to be the benchmark. And you're going to see that the third one right there is your healthcare. Those are the top three that on different durations of time, okay, that have been quite strong. Now, the one thing that we'll notice on the financials, we do see a 20-day high, and we also see a 55-day high on the financials. Now, remember what I said before. We could talk about all the macroeconomic data you want. Maybe the better data to look at is what the financial companies, Chase, Wells Fargo, Citi, Bank of America, and all of them are actually saying about the economy, about the, the people, the personal loans, the business loans, et cetera, and how are those doing. Now, just real quick, if we go back to this, let me take a quick look at how these look, and then we'll talk about some new positions. But if I look at, let's say, the sectors, and let's first start off with this one, communication looks like that. Now, remember, what the investor is trying to do or trying to align themselves, their portfolio to, is which stocks or sectors, indexes, are above the shorter term moving averages with the moving averages green. Is that sinking in? Okay, communications is doing that. Now, if you look at, let's say, the other area like financials, you're going to see that this has been a rocket ship. And you could say it's like a cup-like pattern, but it's not really rounding back to the upside. It's more like a V pattern where it's going up almost at a 90-degree angle, okay? So some of those financials might not be done yet. Some of you might enjoy that to consider. Now, when you look at the healthcare, okay, healthcare has really reversed quite a bit. And if you look at, let's say, Staples, there you go on Staples. Staples is kind of at a critical juncture. Can it give up this old high? Classic V pattern actually coming off the bottom, and I mean a massive candle. The bigger the candle at resistance, okay, great, that's bullish, probably the greater chance that the price could breach the resistance and try to even go higher than that. I'll come back to that area in just a moment, okay? Now, the other area that I want to touch on, has anybody been watching any commodities at all? And I want to open this up to you. Anybody been watching any commodities that has shown strength here? Now, we know it's not crude oil. Okay, we know it's not crude oil because last Thursday we said warning on crude oil. Looks like it was slipping. Started to show some weakness on the 10-day moving average. Does anybody know any commodity that has been showing strength? And we ain't talking about cattle. Okay, and okay, good. Now uranium, okay, fine, Buddha, I like it. And so the other one is gold. So we saw gold actually drop yesterday. Gold today fired back to the upside, trading above yesterday's high, and is almost at a brand new high. Okay, now don't tell that to my spouse because my spouse will try to say, well, you know, buying gold for me, honey, is an investment. Don't think of it as an expenditure. Okay, a little fun there. Just we'll stop it right there. Okay, now, so first off, do not forget about gold. I can't bring it up because this isn't in class on that product, okay? Now, but just, you could check that yourself. Now, I want to go back to just real quick, the market watch. Let's bring up just real quick, if we can, public, and let's go down to the Dow Jones Industrial Average. Now, we said our goal was we want to look at some stocks that have some earnings. Now, this could be that maybe the company has not announced earnings yet, but maybe their competitors have. Example given, we saw SAP over in Europe announce their earnings, and Salesforce CRM is similar here in the US. Or it could be something that itself had earnings. Maybe we're trying to play after earnings, maybe like Boeing. Or maybe it's something that's coming up in earnings. The answer is all three of them. We're going to look at all three kind of variations of that. Now, the one I want to kind of take a look. So first off, when you look at this list, there's quite a bit of green here, okay? Now, how is this list ranked? Well, it's ranked by the relative strength, the RS5. Now, remember, the RS5 relative strength, okay, that RS5 is also pretty correlated to the week percent. And that should make sense because if something is strong in the shorter term, last 5 days, the week percent is based on 5 days, okay? The last 5 trading days. So if you take a look at this, we see a pretty strong move here in CRM. And this is why you don't want to just look at a company. You want to know who are their competitors and are they announcing ahead of maybe the stock that you're looking at. SAP, okay, announced, and that's also related to the CRM. So CRM hasn't announced yet, but they're thinking, hey, if SAP did pretty well, maybe CRM's earnings could be pretty good. Now, Boeing actually here did announce the lowest earnings they've actually had since 2020. And sometimes when a company is struggling, they might just kind of throw it all in and say, hey, we're going to take all these losses, which is going to really show a big miss. That way, the next quarter or the next year, it's probably not going to be as bad, that's the idea, as it was, let's say, this quarter, today. So that's kind of something we're going to be watching in just a sec. Amazon, that's at a brand new stinking high. Now, let's kind of show what some of these look like on the charts. When you look at CRM, okay, what you're now going to notice on CRM, there she is. Classic little diagonal resistance breakout, okay? And if you look at, let's say this, kind of the diagonal break was right around the moving average crossover, okay? Big bullish engulfing yesterday with a close above the high of the low day green candle. And you're going to see a little gap here today on the news of what happened with SAP. Now, when you take a look at, let's say, Boeing, you're going to see that the kind of a gap to the upside rallied. Well, that rally in price is kind of back up to that near that 188 price level. And you're going to see that they have been printing nothing but minuses, minus, minus, minus. So why do people buy these stocks? Well, they're actually thinking that maybe a lot of the negative might be closer to the end. Now, I don't want to say this bad, but there's been so much negative on this, it's unbelievable. I mean, sometimes you just have to say another thing. Okay, that's what it seemed like. And if we look at the last one, which is Amazon, you're going to see that someone yesterday, when it dipped down on price and it was down, someone literally bought it and rammed it all the way up. Today, we see it kind of retrace a little bit yesterday at the open, not much of a lower tail, and then pushing. Now, what I want to do is I want to start here, okay? And so if we take a look at this, now, by the way, does Amazon have maybe correlation to kind of AI and the tech? Maybe, okay? The thing is, Amazon, I think, has a little finger in everything. Pharma, selling cars now, Hyundai cars, selling just basic household items, whatever, kind of have their fingers in all the pots. Now, earnings on this, if we take a look at this, is on 2/26. So there's about a week left to go. Now, let's say the investor said, James, I want to play something and I plan to hold it over earnings unless there's enough profits to take beforehand, but I want to be more conservative, okay? And I want to play something that's kind of more based on probability, okay? So what I'm going to do is I'm going to bring up Amazon right on the trade tab, and let's go to the 21 Feb expiration. Now, if I said, James, I'm a little nervous about some of the recent market activity like we had yesterday, okay? Now, by the way, yesterday is a pretty good example of there's what's called Porter's 5 forces. And on a Friday or Saturday night when you're wondering what should I do, you know, in basic economics, there's a gentleman, it's called a Porter's 5 forces, and it's talking about competitors and how competitors can eat away at your business. Not a bad thing to review, okay? And that was a classic demonstration yesterday, okay? So if you're kind of wondering, geez, what would be an interesting maybe economic study, Porter's 5 forces, okay? And also think about how that relates to stocks, okay, which it totally does. Now, if we take a look at this, I'm going to hit the drop down. Let's go to here. And what I want to do is I want to choose something in this case that is farther down in the range. So when we talk about selling something, like selling a put, example given, we normally talk about a delta of 30 to 40. Well, if I go a lower delta, there's a lower statistical chance as of right now of the stock being below that. So in this first trade example, we're going to sell the 230. Now, the big thing is also, if we're trying to be more conservative, we're going to try to actually buy a put below to actually create a maximum loss. Now, what you're now going to notice is if we sell something that has a 30 delta, that means there's a 70% chance. 70 is not 100, okay? There's a 70% chance we could be above the 230 strike at expiration as of right now, and there's a 30% chance we could be below. Now, if we take a look at this with that 30% chance, we're going to widen this out to, let's say, the 225, and you're now going to see there's a $1.37 credit. So when you take a look at this $1.37 credit, the reason why that matters is the investor is trying to say, is there enough meat there of credit relative to the risk? Well, we take the maximum gain given the vertical, $1.37 or $137. We divide that by 363 or $363, and that return on risk is 37%. Now, let's kind of speak to this. What's the break-even expiration? Well, the break-even expiration, since you're getting a credit, is below the strike that you sell, less the credit. And now what you're going to see is that break-even expiration is at 228. Now, the stock right now is at 240. So that means the stock could go down $12. Now, don't ever say the words, that's so far away, okay? Because on earnings, it's probably not as far away as you think. So what you're now going to see is we're going to actually do this over the earnings or into the earnings, and we're going to try to actually say, how many contracts could we do? Now, if we're in the IRA account, we could take up to, what did we say yesterday? If I look at this account, 102,000, 0.5% risk, we could really take, actually, 3/4, okay? If we did 0.75%, let's review those numbers one more time. If I took 0.75%, and actually, that was on the margin account, so I was right, 102,000, 0.5%, it's $510. We cannot do two contracts on this. It's really going to be, in this case, one contract. Okay, it's going to be a little bit less than the max loss. So what we're now going to do is note the commission there, cost of the trade, including commission, for selling and buying the option. Net credit, there it is. Send that order. Now, what I like to do here is I like to kind of put it in the section. So this is a short vertical. And I'm going to send that, and we're going to try to put it right in that basket called short verticals. Now, if you say, James, I don't have that, well, then that just means you haven't made the categorization on the account yet, okay? Send the order. Now, so our first trade here today is Amazon, okay? And what you're now going to notice is this is one that's really done a pretty good job of bucking the trend. So when things drop, you should always be asking yourself the question, what has bucked the trend? And one that was easy to see was Amazon. So when you saw NVIDIA down as much as you did, you say, my gosh, like Amazon's only down $1 or $2. That's a pretty good chance, pretty good idea that you can see that institutional investors, retail investors, they're kind of seeing which stocks might be winners and losers. Clearly, it was semis losers yesterday, but that didn't mean everything lost. Now, quickly, when we look at a current example, you're going to see that we had a price target on Meta at 675. We talked about that yesterday, okay? And we went over this extensively yesterday. But we do have one position remaining that we need to address. What is that position? Well, it's this one, okay? So we have a long call vertical, bought the 620, okay? And then sold this 625. Now, I need to ask you, should we consider getting out of this? Okay? Is there enough there? So first off, let's run the numbers just real quick, okay? Now, sometimes, we look at this number and say, is that enough for me to want to take? That's not really the way you want to look at it, okay? We want to think to ourselves, well, what's the spread with? $5. What was the debit? We paid that a minus. We collected this a plus. So if we bring that calculator out, we paid $37.25 minus $34.80. So we paid $2.45. That's the debit. So if we have a $5 spread, okay, and we paid $2.45, the max gain obviously would be $2.55. Now, how many contracts do we have? Answer, we got 3 contracts. So if we said, well, how many, okay, how much is that? 5, 6, what is that? 7? $765 is the maximum gain. Check my math on that. Right now we're at 382 of the maximum gain, 765. Why did we not take this off yesterday? Because we're barely at the 50%, okay? Now, this is the first time, once we get to the 50%, which by the way, right now, we're higher than where we were yesterday. So we're now just getting to the 50%. Now, for some investors, this is where they say goodbye. Give me the money, spank you very much, and I'm going to go look for another setup, okay? Now, some might say, James, I like 65, or I like 80. Now, if we go back to this trade for just a second, and we look at this and say, well, when is the earnings? It is tomorrow. Now, I need your help here. If you looked at this, do you think it's maybe at the top of the channel? Yes or no? If I went back to the kind of looked at this and kind of saw some previous areas or angles here, now I might even say something like, I want more. I mean, my gosh, we always want more, right? And if I extended this to the right, it kind of looks like it might be at the top, okay? Now, it only has 50%. But if we don't want to run the risk of this is at earnings and giving back maybe some of that money, okay, the investor might say, James, I'm at an area of resistance. It's 50%. I want more. We can say that every day. But I don't want to hold over the earnings. When I don't know, A, what the earnings is going to be, and 2, I don't know the reaction from the investors. Now, some investors might say, James, if we could sell at resistance in their book, that might be a victory. So we're going to take that kind of point of view that, yeah, this could have more, but what we're going to do is we're going to right click on this, create a closing order, and we're going to sell, okay? Now you're also going to see the number that we ran, I said 50%, it's a little bit more, it's sitting right there. And I'm going to create closing order, and we're going to sell Meta right into that area of resistance. Okay, sell. Now, if this pops to the upside, would it be surprising? Maybe not. But the thing is, we're trying to kind of take what we have right now and then let the trade reset or the stock reset after the earnings. What we're now going to go ahead and do, we got in for a debit, we're getting out for a credit, okay? And we're going to confirm and send. Now, the thing is, we do not assume that the trade fills. We want to verify that it fills, and we want to make sure in the first 2 to 3 minutes that this order fills. And if it doesn't, we want to really probably slightly move the price around just to make sure it fills, okay? So this is where sometimes writing it down on a scratch pad and just kind of like task orientation, okay, good, now it's done. So a lot of times when you're multitasking, you might say Meta, just write it down so you don't forget and get pulled over into something else that you're working on. So Meta is done. Now, so yesterday we talked about the reward to risk stop adjustment. We got hit on the stop on the stock, and then we just did the option on that. Now let's go back to just real quick, Starbucks. Second thing I want to discuss real quick is Starbucks, we have 160 shares. What I would like to do is I would like to sell 60 of them. So that way we're going in over the earnings with the caller that we talked about yesterday. So all I'm going to do is I'm just going to trim 60 shares, okay? And if I sell those 60 shares, I'm just going to move up my stop to where the current price is. And I'm just going to trim 60 shares. It didn't go up to the target that we wanted pre the earnings. I just moved up the stop a little bit, and there's a pretty good chance it canceled the previous stop. And again, in the first 2 to 3 minutes, I want to make sure that one fills, and it does. I wanted 99.25. It filled at 99.24. So now when I look at the position, you're now going to see that we are going in over the earnings with a defined risk trade. Owning 100 shares of the stock, we have a long put to the downside, which is just the right to sell. That was paid by the short call. That's a caller, okay? So now we're going to look at, and we talked about this yesterday, just kind of doing a slight kind of trimming, and there you go there. Now, are there any questions? Now, Jeff actually says, would you consider selling part of the position and letting the rest ride through the earnings? So I think you're talking about the Meta position where we have 3 contracts. If you were going to do that, or an investor, they might say, I'm going to sell 2 and maybe try to let 1 ride, okay? I think in the case where we're kind of right up at resistance, I think the investor might say, maybe I'm going to sell all of it. If the investor thought, let's go back to Meta for just a second, okay? So the one thing that kind of has us wondering, when you go back and look at the past earnings of the stock, 471, 516, 603, right? We know that Meta has made huge capital investments, okay, in their business. And we're talking about in the tunes of billions and billions of dollars. I mean, could you imagine that? Billions. Billion, thousand, million, and you did a couple thousand million. And so we know that Meta has been investing a ton. Can that investment be returned back into a return for the company / investor? Now, when we look at this, when I pull this down here, we're going to look at the expected earnings. Now, remember, this is the expected, okay? So when we look at the expected earnings, I don't see something that's stair-stepping up in expectation. So we don't kind of see that maybe they're thinking that turnaround investment might be sooner than later. But with it, when you spend billions of dollars, you sure hope that that money is actually coming back, at least some of it, okay? I don't see the expectation built in yet, like massively, like a stair-stepping, a progression. But that's something I really want to be watching, many investors want to see. Can they actually start to give a higher expectation going forward? And by the way, can the analysts actually start to adjust that? So that's something we really want to be watching on Meta. Now, the one thing I will bring up here, okay? What happens, now, put the investor, so number one is we have 3 contracts. Could they maybe sell 2 and maybe keep 1? Yeah. Could they maybe sell all 3 and maybe just do a way far out of the money put? I mean, I'm talking about like below 620. That could be another way to do it. Okay, so I would kind of be thinking about that maybe some investors might be thinking, I'm going to sell the majority and keep a minority. Sell 2, keep 1. Okay, but that depends if they had 3. Okay, now if we take a look at this, yeah, so Villager says trading options is great, giving you something to do or trade every day. Well, the difference between, let's say, options is with options, we don't always need the positions to move. We could play a direction, okay, or trade a direction. You could also play neutrality in price and get time decay. But the also other thing with that time decay is you can also get volatility contraction. So it's a little bit, yeah, there's more things going on, because if we bought a stock and it didn't go anywhere, it didn't make anything, okay, unless it paid a dividend. Now, I do want to go back to just something real quick. Bring up just real quick Costco, okay? Now, something I want to bring up on Costco, big green candle right at this breakout area yesterday, a monster candle kind of sitting right here. I want to come back to this in just a moment. Now, we might look at this and say, oh, it's horrible, it's down $10. But if you get suckered into that, you'd understand that this drop down might be a potential gift. Sometimes when you have these big updates, there's some short-term traders that want to take profits. Those short-term traders don't necessarily mean if they take profits that bounce is over. They're just profit taking. Now, I want to also bring up Walmart for just a quick second, which is showing a nice cop, not much of a handle. Now, we did not see that flag pullback here at the prior high. Now, if you don't get the pullback at the prior high, what does that say about a continuation pattern? Maybe more likely to go up. Keep an eye on that. But the one I want to keep an eye on is Target. Now, Target did a full 180 on some of their initiatives for inclusion. Interesting. A lot of people push back on that. And so now the company has said, hey, we're gonna go back to what we were doing before. Okay. And so keep an eye on also Target, okay? Because if Target has underperformed for a long time, just lost out in billions and billions and billions of dollars, okay? Making people upset. And maybe could this be starting to reverse? From that decision, there's been like a V pattern on this. Notice if we could get closing higher than 142, you got a path of least resistance at 147. Get above 147, path of least resistance at 156. This stock traded away from Costco and Walmart, is kind of not correlated. But if they actually kind of go more in line with what the other two are doing, could it trade more in line with the other two? Now I'm going to go back to Costco, okay? Now if you take a look at Costco, we're going to try to use this down day after a little, well, you had a big update yesterday and a little retreat. Now notice where it's sitting right on the 10-day moving average. Now, again, do not just look at the red candle. Look and see where the red candle is in relationship to where you think support is. Well, if the investor says, James, I think this is maybe acting as an area of support, and maybe Costco could get a little bounce here, we're going to go into, let's say, the 21 Feb, same thing, but we're going to go to playing a little bit more directional. And if we want to try to play a little bit more directional or have a higher potential gain, now the one thing I want to verify, this is $1,000 stock-ish. When you have $1,000 stock, what you're going to notice is the spreads tend to be a little wider. So you want to make sure that if you did this, you have to realize there's a con about this. Wider bid-ask spreads are probably not going to be things that you can get in and out as quickly as penny-wide options. The other thing is we want to make sure that the fill is, if the spread was 80 cents, we're going to try to make it where we're going to try to get filled at probably 40 cents, not 80 cents. Okay. So what we're going to do is we're going to buy the 950 and we're going to sell the 960. Now, what you're now going to notice is we have a mid price there of 290. And we want to make sure that we kind of go a little lower. Now, if we did that, what does that probably mean in terms of the fill? It might take longer to get filled. Now, when we look at the open interest, there is open interest there. And if we look at this right there in the 960, there's open interest there. But again, higher price dollar stock, wider bid-ask spread. This is probably not trading instrument. This might take a little bit more time to get a fill and also to get a potential gain, okay? So what we're going to do is we're going to do the 950, 960. Maximum loss on the IRA, well, 530, which is at the maximum loss, one contract. Maximum gain given a $10 wide spread, 950, 960. Debit there, 530, and there's your maximum profit. So the maximum profit is if the stock is above the 960 at expiration. Now, you got to be careful a little bit, because if you only have 24 days remaining, this is not a whole lot of time. If the market were to go down, there's not a lot of time for this to come back. You understand? So if you start going less than 20 days, you better be confident. That doesn't mean you're always right either, okay? But we don't have a whole lot of time. So this is something like a 2-week trade, 3-week trade at the most. Can this start to bounce back up to the upside? And can we start to get 50, 65, 80% of the maximum gain? Now, what I'm going to do is I'm going to send the order right there, okay? Now, yeah, so on that order, we did the 950, so second trade, buying the 950, check, JW. We did change that from the 955, we did, good eye. We changed it to from the 955 to the 960. We widen out the bid-ask spread. Why? Well, because we can, okay? If we widen that spread out, the max loss is not going to be more than what we can take, okay? Now, I want to also go back to, so one thing I want to do, I want to go back to just real quick Target for just a moment. What I want to do on Target is, if Target gets above today's high, I want to know about it, okay? If Target gets above today's high, that means that some investors are going to be buying on that dip, and maybe they're thinking that Target might trade more in line with, okay, Walmart or Costco. Now, I'm going to say mark at or above 145.34, which is at today's high. I'm just going to set an alert. An alert is not an entry. Hey, so if Target gets above, at or above 145.34, let me know about it, okay? But that's what I want to keep an eye on. I do think it is interesting is that the CEO of actually Target, probably under a lot of pressure as they're looking at the shareholders and the board are probably saying, wow, underneath your leadership, you haven't done a whole lot. You have the retail space that Walmart does, okay? And we are nowhere near where Walmart is. And so the pressure builds to make changes, okay? And so, interesting. Now, that could also be outside shareholders as well, or activists. Now, the other one we want to keep an eye on is Dash. I won't say much on this, but that's the other one that's kind of fighting. We're seeing some lower shadows there, fighting to create a new higher level support, okay? Keep an eye on Dash. We got a position on that. That is coming into earnings. The other one I want to also keep an eye on is Lulu. Stretchy pants and all, okay? Now, what we're going to see is on earnings, we don't see that earnings yet on the chart, but this is one, would you say that this has been acting as like a new level of support? Okay? I mean, how many touches do you need? How long does it take to really create a support level? Well, some investors might say, James, over maybe 2 to 3 weeks. We might be thinking that it takes 2 to 3 weeks to create a support, or maybe a couple touches, 1 touch, 2 touch, 3 touch. There's 3 touches. There's a triple bottom. And then you get on the top side of kind of a triple top. Now, why is this maybe of some potential interest? Well, sometimes the MACD can kind of give us an idea. Might it have enough momentum to actually poke its way through the ceiling of resistance? Well, if you take a look at this, what you're now going to notice is the MACD is finally showing a little momentum, higher than we were here, and the highest that we've been over a couple weeks. Now, what you're now going to notice is this is not earnings tomorrow. We might be a little early on this, but we're going to actually go back to the Lulu and wonder if Stretchy Pants could actually get a little move to the upside here. Now, again, $412 stock, bid-ask spread 70 cents. So there's kind of pros and cons. You trade these higher price dollar stocks, bid-ask spreads are wider. Normally the bid-ask spreads we like on typical stocks might be 20 or so cents. If we trade this, we want to make sure that if this is 70 cents wide, that we really try to get something maybe 30 cents in the middle, the mark, okay? Now what I'm going to do on this trade is I'm going to right click, buy, and the reason why we're choosing a long call vertical on this, the 410 and the 420, is we're trying to stay where there's more open interest. 430 there, not selling that. There's only 61 contracts in the world. It's not very much. Could be just one person. And what you're now going to notice is, or entity, we're going to sell the 420. Now, there's the debit. Same thing here. The IRA could do one contract, which means the maximum gain is just spread width minus the debit. So the third and final trade here is really doing Lulu. Now, we're wondering, could the MACD kind of be showing maybe what the future might hold? Could that momentum push the price up, smash its way through resistance? Now, if it could do that, where's the next target? Well, that target, the next one, or the channel width in closing here, from 368 to let's say 406, it's about 40 points. 40 points on top of 406 is going to get us to right about where that is. Notice that where that 40 points on top of 406 is getting us right back to where this old breakdown happened. So it's kind of interesting how a lot of times it goes back to where it was before, okay? And it's really right there. And if I back that chart off, you're going to see it right there, okay? So it's interesting. So that was our third trade. So the trades we actually did here today was, we did example given, we did Costco, okay? We also did, for example given, Lulu, and we also put an alert on Target, and also keep an eye also on, we also did Amazon as well. So I'm out of my time here today. I want to give you a quick reminder that the coaching schedule right here, and the next class coming up right at the top of the hour, if we go back to today's date, and that today's date right there, getting started with options, and it'll be Cameron May. Reminder that you can also subscribe to the Trader Talks channel, and you could do that right there. Now remember also, I want to thank you so much for your comments and your participation, and thanks to you, Barbara, as well. Our focus here today was to talk about some stocks or options around earnings. It could be announcing earnings itself or having competitors. Did 3 example trades. And with that said, we'll follow through on those trades, and we'll keep an eye on what happens with Meta and Starbucks as well. Remember that investing involves risk. And also remember that this has been the class on the Investor Master Series. We will also keep an eye on Meta as far as what they announce with earnings expectation going forward. Thanks so much. Stay tuned for Cameron May coming up next. Take care. Bye-bye.